Ask yourself that question. Like, why am I doing what I'm doing? And what is the goal? What am I trying to achieve in life? Not just today and tomorrow, but for the next decade. Landscaping, not just service businesses or blue collar or home service. Landscaping is super hot, especially commercial maintenance. We call it key man risk or key woman risk. And that is an issue for an investor. So if you are in a process and you're busy doing that and your business starts to slide on EBITDA or
lift off.
What's up, guys? Welcome back to weekly update number 62 here on the Trades Talk podcast. Hope you guys enjoyed that Cameron Herold episode that dropped Wednesday. Absolute incredible guest. I mean, someone who has taken so many companies to scale is always someone we can learn from. So hope you guys had a chance to listen to that episode. And if you haven't, go back and take a peek. I think it's really, really worth listening to. Today's topics, we're going to cover three. Number one is going to be private equity and what's going on in that world of acquisitions and M&A. If you guys have seen the headlines, it's been pretty active. So I'm going to share with you guys, 12 different deals that have happened in the last 3 or 4 weeks. We're going to talk a little bit about AI connectivity and how to connect your apps together, why that's important, and talk a little bit about just this idea of what's it all worth, what's it all for, why are we working so hard? All right, so let's get into this thing. Before we do, I want to give a shout out to our sponsor, Crest Equipment. They're our weekly update partner making this episode possible every single week. Thank you, Crest. We partnered with Crest going all electric coming up on 2 years. And as we come up on 2 years, one of the things we are doing is we are doing all of our annual budgets for all our maintenance clients for the year of 2027. And a big highlight that we're pointing to is our completely electric fleet. The electric fleet has really shifted the customer experience. And we want to highlight that. It's one of our, I'll say it's one of our few differentiating factors on site. I think we have a ton of differentiating factors as a landscape company, but come on, guys, let's be honest with ourselves. There are a lot of amazing landscape companies out there doing amazing work in pretty much every single market. So high quality work and great communication and technology utilization is not going to differentiate you in 2027. Doing things that no one else is doing or very few in the market are doing, like going 100% electric, are the ways you differentiate going into next year. Check out Crest. Go to jwhitegroup.com/Crest and sign up for your free demo. Okay, let's get into private equity. So this week, as you guys know, I'm on leave from K&D. So I'm not really in the day-to-day at all at K&D, actually. I didn't even talk to John this week, actually, who's our COO. So I pretty much have had the whole week to just focus on the house and the family, getting ready for the baby coming here any day. And I've spent a lot of time just actually thinking about stuff. And I've also spent time talking to people because I'm a little more free. I'm a little more open. So when people call, text, send me emails, I decided this week I'm going to be open to anyone who wants to talk about acquisitions or purchasing or M&A. And lo and behold, I get about 2 or 3 of those emails every single day. So I've taken like 2 or 3 calls every single day this week. I have taken a lot of 30, 40-minute phone calls, ad hoc. Someone will email me a cold email. Hey, are you looking to sell K&D? And they have a number in it. So I just call them back immediately. And I had Drew just let me know when these things come through. And I called him and I'm like, hey, let's talk. And it's been really interesting to get to talk to the ecosystem. So this week I have talked to strategic buyers. So think of companies that are already at platform, that are already built out, that are looking to bolt on or purchase additional brands. And some ones that I'm going to talk about today is Afix, Bland, Mariani, Environmental Landworks, Osprey, Vistera. These are guys and groups that have been purchasing other landscape companies. So I've spoke to a few of those folks, not necessarily the ones I just listed, but there's 30 or 40 of these guys out there. I then had meetings with advisors, people who will come in and help build your company up to get ready to sell. Probably the most well-known name in the industry, the market leader in the landscape industry, is Jeff Harkness and the 3PG Group. Big shout out to Jeff. He's a good friend of mine. Great operation. I already know Jeff and what they're doing, and we're not like trying to take the business and go sell it right now. But I took a call with another advisor, and it was really cool to hear about their process and how they take businesses from thinking about selling to actually running a process. Now, when people say, I'm going to just over explain this entire thing today. When people explain running a process, I'm going to give you the highlight of what I understand. Now, take this under advisement. I've never sold a business. So this is me just hearing it secondhand and interviewing a lot of people. So basically, you bring in an advisor. They will come in, they will spend 2, 3, 6 months, depending on where your books are at, where your business is at, preparing your company to sell. Getting the P&L in order, getting the balance sheet documented, maybe taking care of some of those balance sheets that are a little messy, maybe some family business stuff, cleaning some books up, getting your HR documentation into place, your I-9s, all of that stuff, working on your contracts, making sure they're rock solid, making sure they're consistent, working on some of your processes, like maybe a sales process or a hiring process, just defining what you have going on for your business before you go to market. Then they will run a process, and basically they'll build out a teaser, and they will send out an anonymous 3 or 4 page PowerPoint to hundreds, maybe thousands of private equity and investor-led companies or funds that are looking to invest in the landscape industry, kind of showing what your business is all about, your revenue, your EBITDA, your location, but not really going into detail around your company or specifics around margin, just kind of giving some highlights, right? A teaser. And then once that is basically, out there, they start lining up meetings with people who may be fits for your company. And you may meet with 10 to 100 different funds, depending on how robust of a process you're running and how attractive your business is. And then from those meetings, you pare it down to your top 5 or 7 funds or 5 or 7 private equity firms that you see yourself working with. And then you go into maybe a little bit of light due diligence to really kind of feel each other out. And you figure out and land on 1 to 3 firms that you want to actually go into deep due diligence and go into a quality of earnings and really do the work that's going to take your business from a conversation and an initial proposal to a full LOI, a term sheet, and then a final close. This process can often take over a year from the engagement start date with this advisor. But the idea is you're going to get a lot more money. Not only will you hopefully get a larger multiple, but your profit will be better and your business will look better over the course of that year. You start to make different decisions about how you run the business. And this is where I'll caution you guys. I've seen a lot of companies go through this and A, sell for less, or B, not sell at all, simply because they got so distracted. The CEO was so distracted with running the process that the day-to-day business started to fail. And this is a sign for investors that you are more important to the business than you lead on, or you are the key man of your business. We call it key man risk or key woman risk. And that is an issue for an investor. So if you are in a process and you're busy doing that and your business starts to slide on EBITDA or gross profit or revenue or employee retention, some of these key performance indicators, you may end up not selling or in a worse spot than when you started off. So make sure you find the right advisor if you're going to go that route. Now, that is for a platform-ready business. A platform-ready business is going to be a business doing around 3 million of EBITDA or more. Now, we're seeing some platforms being built around companies doing only 1.5 to 2 million of EBITDA. Now, I personally don't think that's big enough to start a platform on, but I'll explain why later, while that is actually becoming more common because of the lack of companies. I'll just explain it right now. There's a lack of companies that are platform ready, and there's a increase of private equity companies looking to get into the landscape industry. They want to deploy their funds, allocate their money, and allocate their capital. And if you are a company doing 1 or 2 million of EBITDA and you're on a good growth trajectory, they may actually decide to platform your business now, add on additional acquisitions, and get to that 12 or 15 million of EBITDA over the course of the next 3 to 5 years. Now, the problem I see with that is your team, your brand, your processes are not ready to scale to 10 or 12 million in EBITDA. So when you add in those additional companies, you start to see a lot of fracturing going on in key areas of the business. This includes client retention. This includes gross profit and labor variance and labor management. This includes employee retention, especially at the mid-level and upper-level management levels of the company you have and the companies you purchase. So if you have to start replacing mid-level management, which I think in most landscape businesses does the majority of the work, you're going to end up with promotions before people are ready, or you're going to bring in people from other companies that don't know your systems, don't know the process, maybe don't know the market, and really struggle to achieve the continued organic growth that is needed to balance out the buy and build model. So that is kind of like one phase of this ecosystem, the advisors. Next up, we've got brokers. Brokers do similar things, and often advisors are brokers, and brokers are consider themselves advisors. But here's the thing. Most brokers are going to structure the deal to only get paid when you sell the business. No money up front, whereas advisors are going to take a retainer because they want to get paid for the work they're doing, and they don't want all of their incentives to be aligned with you selling the business, because a true advisor may decide 6 months in and say, hey, man, it's not the right time to sell your business today. That is how you know you're working with a good advisor. Now, brokers are a little bit different. They're brokers. They want to sell the house. They want to sell the business. They want to get that commission check. Often 3 to 6% of the selling price will go to a broker. So they are looking at a big payday when we're talking about a 30, 40, $50 million deal. Now, you've got to be really careful with brokers because they're going to push you into doing the highest value deal, getting the most money for your business, even though it may not be the best fit for your business. Oftentimes, the highest bidder in a deal is not going to be the best fit for you. Now, a broker is not necessarily going to distinguish between those two. They are going to opt for the highest value or the best money up front, maybe, on a deal. So be careful when you're just working with brokers. And a lot of the guys reaching out to you today are probably brokers. People who are cold emailing, cold calling you, saying, hey, I represent ABC company. A lot of people are here in Monarch and Vistera and Mariani. And these brokers claim to represent these companies when in fact, they don't. In fact, they are free agents and they're just out there cold calling, cold emailing landscape companies that show up in the news that look like they have at least 1 to 3 million of EBITDA. And they're trying to get you to sell your business, because if they can take your business and they could pitch you to a Mariani, for example, and that deal gets done, Mariani's going to give that broker a kickback in addition to you paying them a fee. So there's a lot of money out there for people to do really good marketing and a lot of good cold emailing. So most of the emails you're getting, most of the cold calls you're getting, the annoying spammy stuff, are not from landscape professionals. They're not even from the firms or the private equity groups that represent the landscape industry. These are freelance brokers looking to make a percentage, a point on your deal. So I just want to give everybody a heads up on that. And also, I want to defend the PE guys out there who are currently in the market. The firms that are backing the Marianis and the Spurbers and all the other large strategic roll-ups right now, these guys, I think, for the most part, are doing amazing work. And they kind of get a bad rap because you have these brokers cold emailing and cold calling everybody nonstop. And that's because there's a lot of money in it for them. So if you are looking to sell your business, you're better off going and finding a Jeff Harkness or a 3PG to start with, and then go find the right partner for you. So I'm going to keep going on this ecosystem. And so far we've covered advisors. Now we've covered brokers. Let's go into the strategic purchasing companies. And I kind of talked about these before, but I want to explain exactly who these people are. So they're exactly what I was just saying. The Marianis and the Spurbers and the Blands and the Yellowstones and the Heartlands and the Brightviews. These are strategic buyers looking to purchase and add revenue to their existing businesses. They are looking to add revenue either in a new market that they're not currently in. They're looking to add revenue in a service they're not currently in, like Bland purchased Charleston Grounds Management and Clear Lakes and Wetland Services. Clear Lakes and Wetland Services in South Carolina focuses on like pond management and lake management. So I don't think Bland purchased Clear Lakes and Wetland Services for their revenue or EBITDA necessarily. It was to get into a new service line. And now they can go after large HOAs with lakes as a lake offering or a water management offering first, and then sell into the landscape maintenance. And when you have a platform like Bland does, shout out to Kurt Bland and that team. I think they're doing a really great job kind of in that, Southeast market. They can now enter in a new service to their existing portfolio across their entire portfolio, across their entire platform of companies. And they can immediately scale that service, maybe 4 or 5, maybe even 10x, depending on the size of the business and the opportunity they have. That's a strategic buyer, and that's going to be a fit for the majority of landscape companies. In fact, the 12 deals that happened in the last 3 weeks all happened by strategic buyers. None of them were platform builders or platform starters. So that's where we're going to go next, platforms. So a private equity company looking to start a platform, they're looking to get into the landscape industry. These are the guys who are looking for a 3 million EBITDA company or more, and they're looking to start a new platform. Now, there's a few platforms that have been started recently, but honestly, it has slowed down in terms of new platforms starting because there's just a lack of great landscape companies that want to start a platform. There's not a lack of buyers. There's not a lack of capital. The people who wanted to sell over the last 3 or 4 years have sold, and the people who haven't wanted to sell haven't sold. Like us at K&D, we get approached to platform constantly. And, we aren't going to do that quite yet. At some point in the future, we might. As you guys know, I've talked pretty openly about this. We're not going to get to $1 billion in valuation, $150 million of equity, and $100,000 minimum wage by not acquiring other companies and eventually doing a platform. It's just today we're focused on concentrating, building the strongest $25 to $30 million company we possibly can across multiple markets. So that's kind of the platform side of things. And then you kind of have 2 different platforms happening right now. Let's use Yellowstone and Mariani. And I'm not picking on these guys. I keep using Mariani. Frank Mariani's an amazing individual, and they've got a great team, but they're just a very well-known company, a well-known name. Like, they've done great in branding, so it's easy to know. And Tim Portland with Yellowstone, same thing there. Great branding, great company, high EBITDA, really successful in terms of owner rollover and participation. So Mariani is basically a family of brands. It's a Mariani Premier Group, and they're purchasing companies that are part of an umbrella, part of a holding company. Now, while they share equity, they don't share a common brand. While Mariani may be at the bottom of the website in tiny little lettering, you go to these Mariani purchased companies and you see the brand that's been around for 40 or 50 years, which I will highlight. A lot of the companies Mariani is purchasing are companies that have been around for 40 or 50 years. These are OG companies in high value markets where they don't want to change the name over to Mariani because the company that's in that market has grown to have so much brand recognition that it would not be smart to go and change the brand, at least not today. That's their take on this. Yellowstone, however, has really focused on, we're going to rebrand everybody into the Yellowstone platform, no matter the cost, no matter the headache, no matter the friction. Because from what I can see, the thesis at Yellowstone is we believe in a unified brand. And having a unified brand means all of our trucks say Yellowstone, all of our websites say Yellowstone, all of our logos on our crews and our vests say Yellowstone. And so it's 2 different models there. You kind of have like a consolidator who is putting a bunch of brands together under a holdco or an umbrella. And then you have the other that is very much having one brand unifying across their entire platform. We are seeing more of the umbrella approach, more of a family of brands. And I think simply why we're seeing that is it's the easier path. It's really the path that people can do quickly, do easily, and then sell that group of businesses down the road. That's really that first turn, that first platform of private equity. Now, talking to a lot of these guys this week, like I said, I've talked to all of these individuals. I've talked to the unifying brand guys in a strategic. I've talked to the umbrella strategic. I've talked to the PE firms behind the strategic. I've talked to the PE firms that are not invested but looking to get invested. I talked to 2 advisors. I talked to 2 brokers. I've talked to like the whole ecosystem in the last 4 or 5 days. So I'm just like brain dumping everything to you guys. I know I'm super long on this and rambling. And if you're still with me, awesome. This is what the weekly update's all about. Raw, uncut, unfiltered information. And like, if you get it, you get it. We're going on 20 minutes. So if you're still here, thank you. Couple takeaways. I'll try to like kind of land the plane here around this roll up situation. So a lot of momentum is around the landscape industry today. A lot of these guys I talk to in the advisors and brokers and PE side are industry agnostic, meaning they are not landscape specific folks. And they said, look, there's a few markets that are really hot right now. Medical in all areas, medical devices, med spas, and even hospitals and stuff like that, very hot. Landscaping, not just service businesses or blue collar or home service, landscaping is super hot, especially commercial maintenance, super, super hot right now. And then there's some other stuff that's pretty hot, but we're going to leave that off to the side. It doesn't really matter to us. Why is landscaping so hot right now? And why does everybody love commercial maintenance? Can I ask all of these people, what is your unique position? Why should your private equity company earn my business, right? Or why should I sell my company to you? And I tell you guys, like, it's super disappointing. I get the same fucking boring answer from everybody. Like, we're going to provide high level financial guidance. We have a fractional CFO. We are going to provide technology and AI implementation support. We're going to provide compliance support on HR. We're going to provide pricing support and ERP management so you can sell better and you can get out in front of clients better. We're going to put together amazing PowerPoint decks so we can go buy companies better. Like, it's the same playbook. I talk to everybody. So whenever I get that BS, whatever, boring answer, I always ask, hey, everybody tells me that. Why is your firm different? Let's go a layer deeper. And it's really interesting. Like, there's often not much there. Sometimes people will give me like a really good answer around, hey, we have this thesis about how to build culture. It's this, this, and this. These are the three things we do. And we feel like it works in all of our portfolio businesses. But for the most part, very few PE guys have that. Very few of them have an answer to go one layer deeper. They just basically see, hey, landscaping is hot. If we allocate 70, 100 million into this portfolio business and platform, we can probably turn our business into 300 or 400 million over the next 5 to 7 years. That's all they see. So when you start asking questions about culture and you start going deep, just know that their priorities and incentives are probably not truly aligned with exactly where you're at. Just a heads up. So I told you guys I was going to share some of the deals that have been done. So let's run through that list. Like I said, Bland closed on Charleston Grounds Management and Clear Lakes and Wetland Services in Charleston and Myrtle Beach, South Carolina. They're saying, somewhere like maybe 8 to 10 million in revenue based on the employee size. Now, none of these deals publish revenue figures or valuations or multiples. So I'm not going to guess, but I'm just going to go off what's available on their website around employee size, try to give you guys like an area. AFIX, backed by Triangle Landscape Group, purchased Triangle Landscape Group in Raleigh, North Carolina. A smaller company, just looks like a bolt-on. Arbor Alliance purchased Druid Tree Services in Nashville, Tennessee. Looks like a small company, but they've been around since 1978. So pretty big decision for the Druid Tree team. Mariani purchased Mitchell's Landscape in Phoenix. Looks like a smaller company based on the websites. And it's, from what we can see, I think it's Mariani's first entrance into the Arizona market. I may be off on that. You guys can fact check me in the community notes. AFIX back on the board. They purchased Sunrise in Nashville as well. So a couple purchases by AFIX there. Looking from the website, probably a 5 to 15 million revenue company. Their Sunrise, great job, AFIX. Quiet Village Landscaping purchased Preferred Lawn Maintenance in St. Louis, Missouri. Small company based on website. Looks like more of an asset and client book purchase. Owner has retired out of that. Environmental Land Works purchased Hydrologic in Loveland, Colorado. It closed in May, but they just announced it in August. So kind of interesting. It's focused on irrigation for HOAs. So kind of a unique, like I was saying earlier, kind of a service-based purchase. Like they're trying to add another service line. DJ's MRE Capital, they're number 32 on the top 100. They purchased Greenscape Incorporated and Meadow Green. They look like a pretty big company they just purchased based on what we're seeing. CCG advised on the sell. Like I was saying, CCG is another advisor out of Georgia. Osprey, backed by Southland Capital, purchased Land Graphics. First real California deal from Osprey. Osprey's been in, trying to close a bunch of deals in California. First one in Cali, so congrats, guys. Well done. Vistera, backed by Trinity Hunt, they're number 20 on the top 100. They built QualityScape, bought QualityScape July 22nd. That one closed in July. It kind of came to news in August. I wanted to include that here. And Mariani also purchased Lopez Guardian back in July, but I thought I'd throw that on the list. So there you have it, guys. How much of total revenue was transacted over the last 3 weeks? 4 weeks, maybe? Probably 250 million in revenue. So that's awesome. That's great for our industry. We don't have a lot of stats around this. You kind of have to like go do a search. I just use press releases. I go through the top 100 companies. I've got a Claude skill that kind of sweeps everybody, looks at their press page. All of these top 100 and top 150 companies have a press page. I mean, almost all of them. If you don't have a press page, you should. And they publish their M&A stuff. So we just go scrape that and report it here. So I thought I'd do a bit of an M&A private equity talk this week. I hope you guys enjoyed it. You know, one other thing I wanted to mention as, you know, kind of we wrap this up on the two other topics is AI connectors. And this is a whole episode I could do for you guys. But basically, you own the data in QuickBooks. You own your data in whatever large, like Aspire, or Granum, or Real Green, or whatever you're using, Service Titan. You own your data. Now, they may, from the terms and conditions side, own your data, but you can download your QuickBooks file today and save it to your desktop. You can download through Data Pipeline a massive amount of data from Aspire. You can take your client list and download it, right? You have access to your own data that you created. But most of us only leverage native AI tools within our software, or we use a native connection. So let's talk about Claude and QuickBooks here. Claude connects to QuickBooks, and you can probably see that in the connectors. If you use Claude, you've probably already connected it. The problem is QuickBooks and Claude speak two completely different languages, and QuickBooks maybe doesn't trust Claude with everything, right? So think of it like you have a house and you're going to let a guest in. Well, we might only let that guest into our living room or to maybe even our kitchen, but we're not going to let them into all the bedrooms and bathrooms and, you know, the backyard. We're going to kind of keep that guest to just one room. That's kind of what QuickBooks is doing with Claude. It's like, hey, I'll give you some of this stuff, but I'm not going to let you have my entire QuickBooks file, probably for good reason. But there may be things that you want Claude to look at and analyze within your business that QuickBooks just isn't giving Claude access to. So here's what you do. You build out a database that sits between QuickBooks and Claude. You take your API or data pipeline, whatever you want to connect QuickBooks to your Superbase or your database, and you basically bring your QuickBooks system into a database. Now that lives in the cloud, and that database is indexed and re-upped or synced every hour or every 24 hours, depending on how often you need to be synced. And then you can point Claude towards that database in a guardrailed way. So you could basically give Claude specific instructions on how to engage and interpret that data. This is how we use Claude's skills. We give Claude very specific skills, guardrails, and parameters in which to work for. So if you have like a certain way you do your P&L, or a certain way you look at labor variance, or a certain way you call a deal a opportunity or a closed job, or you won the job, different terminologies here, we can basically program those into a skill, and then Claude can basically understand the data at a very deep level. This type of connection requires some level of understanding of how Claude works and understanding of API and how to basically index and set up a database. But once you do those things, you just ask it in plain language, whatever you want, and you can get like incredibly well put together documents, well put together financials, and actually audited financials. Now I'm going to use the word audited very loosely here. Let's actually not say audited. Let's say reviewed. You can actually create agentic loops within Claude that verify the data and basically double check the work that it puts out. And you can do that multiple times with different agents. You can have a skill that will pull in a different agent. So let's say you're using like a low level skill like Sonnet. You can pull in an Opus agent to basically run a verification loop. Now, I would recommend having the highest level model like a Fable 5 being the project manager of your agents, and then allowing those agents to run verification loops on your data to make sure the quality of the data is proper, and then show that work in some type of an audit trail that you can see in Excel, and you could visually audit as a human, making sure everything lines up. So that's a really great way to connect your systems and get rid of these native AI connectors that aren't working. This is basically a custom MCP connector that you set up. You download and set up tools and build tools and skills. It's a whole thing. If you guys want to learn more about it, reach out. We're doing this for Disruptor members right now. We're just setting up 3 people as our first cohort. It's going super well. We're excited. We're having fun with it. All right. Whew. Last thing, guys. I had a chance to interview Cameron Herold on the Trade Stock podcast. That episode went live, and it was really, really, really deep. I took something really deep away from it. With really this, I'm going to sum it up in as few as words as possible. It's like, why are you doing what you're doing? And what is it all for? Like, why are you building the business you're building? Why are you working so hard? What are you trying to accomplish? And if you say, I want to be rich, I want to achieve a monetary number, I think that is going to not drive you towards the most happy ending. And while you should still be financially stable and chase your dreams, and if that includes financial wealth, like great. But when we really ask ourselves why we're doing what we're doing, it probably comes back to family. It probably, like, even making that money, we want to be rich. We want to make money because we want to be able to provide for our family. We want a stable environment. We don't want to have to work every day. We want to choose to work every day, right? So I just want to give everybody an opportunity this weekend, or whenever you're listening to this podcast, to just sit down and really ask yourself that question. Like, why am I doing what I'm doing? And what is the goal? What am I trying to achieve in life? Not just today and tomorrow, but for the next decade. This answer isn't going to come to you quickly. I'm still looking for mine. Like, it keeps coming back to health for me. Like, I just want to be healthy. I want to be fit. I want to be healthy. I want to be financially stable. I want to give more than I receive. I want to do good in the world. I want to help people be happier. Like, if there's ways that I could share my knowledge like I'm doing today, and thank you guys again for this opportunity, being able to like go through and do what I did this week and meet with all these people and then come back and share it with you guys is like such an incredible gift. So thank you guys for that opportunity. And I'm going to sign out there. So we'll see you guys. Baby's coming any day now. So I'm going to keep the weekly updates coming. I got some in the bank. I recorded some pretty fun episodes. I just wanted to dig in and get, I did some research on people that I really believe in and people that I've been following, some entrepreneurs that I really think are awesome people. So Drew will drop those in as needed. But anyway, I'll talk to you guys soon. Thank you. See ya.
Thanks for tuning in to Trades Talk, where the next generation of disruptors comes to raise the bar. If you got value from today's episode, share it with someone in the trades who's ready to level up. For more tools, insights, and community, follow host Justin White and join the movement at jwhitegroup.com.